Well, as we reported earlier, Groupon is seeking an $11.4 billion valuation in its initial public offering. Joining me to break down this IPO is a veteran venture capitalist, well known in this community, founder and managing director of Greycroft Partners, Patricof. Alan, great to have you with us. John, of course, as well joining in, who's been reporting on this all morning long. First off, what do you think of this valuation of Groupon?
First, we have to say this is fresh news. The S1 originally was out 2 or 3 months ago. It was stale. They just refiled, so I haven't obviously read the whole thing.
Yeah.
It's going to be a circus. I mean, I think nobody knows exactly how to put their handle on this. And let me just say, the venture capitalists who founded this company are going to do fine no matter what happens.
They're going to make money.
Exactly, because they came in at very early valuations. But we're dealing with what I call instant art history. Here's a company that's, a year and a half, 2 years old, that's had $400 and some odd million in revenues last quarter. It hasn't been around long enough to be seasoned. It's one of the reasons why I really admire Mark Zuckerberg with Facebook and taking a long time to really let this company season itself out so that when they go public, it'll be a much more calm situation.
Alan, when you say a circus, though, is that a negative connotation?
No, what I meant is I think there's so many rumors, opinions out, the road show they're going to put on. I'm sure there's going to be a demand for that. They're going to have to, fill up Madison Square Garden for people who are going to want to hear the presentations, and that's what I meant. I think it's anyone's guess what's going to happen to that stock after it comes out.
When Groupon filed to go public, a lot of eyes lit up in the venture capital world, and then a lot of companies followed, like Zynga. Zynga is an entirely different company, but if they didn't go public at this point, wouldn't that end up sending a stronger message to all those companies that were hoping that Groupon would be successful and they would follow?
Well, the problem is these companies are absorbing enormous amounts of capital. I mean, before I came on this morning, I just looked. There's a company I never heard of called Groupon Cabin, which had a private financing of $230 million this morning.
Really?
It was announced. And Coupons.com raised $50 million. I mean, the numbers are staggering. It's a consumer-related company. I mean, when you have, 30 million people who bought products in the last quarter, 130 million people signed up. It's very hard to put a handle on it.
Isn't it incredible to you? I mean, is the message not getting out or something like that? Because isn't it incredible to you that you just say a coupon site has raised something like $250, $300 million when there have been all these reports, negative reports on Groupon saying that, they've changed their accounting numbers, talent has left. I mean, is there something going on here?
There's an enormous consumer appetite for this product, and you can't lose sight of the fact that coupons have been around a long time. I mean, I'm a little older than all of you, but I can remember with coupons when I was a kid. You had coupon books. What's different is the distribution method through the internet
right,
is giving a whole new dimension to it. And let me just say one thing is very important. After it's public, it's all going to depend on growth rate. They grew 9% in revenues last quarter, as I read briefly the report. The stocks sell in relation to their growth rates, usually some discount or premium to the growth rate, depending on how long it's going to continue. If you're growing at 50%, you can sell at 50 times earnings. If you're going at 9%, you can sell at 9 times.
But what I'm trying to sort out, Alan, is that it sounds like, Groupon aside, you're saying that the business model, though, is viable.
We don't know yet. There's so many other over, 100, 150 coupon sites? I think that certainly Groupon's had an enormous rise here. You've got to give them a lot of credit coming from zero to over a $2 billion annualized revenue rate. But I think, and by the way, as I understand it, their operating earnings were in the black or slightly, in the red, not much. Yeah, which, compared to a big loss a year ago. So if that continues and people continue to buy and they use the coupons and there's not this frustration by the companies that are issuing that. Right. I mean, there's so many factors involved, but at the moment there's a lot of excitement. And but remember, only 5% of the company is being sold to the public. So you're valuing a company based on a small transactions. Usually 20% is floated either through secondaries and primaries combined or primaries alone.
Okay, Alan, thank you for joining us and racing here to the studio to talk about this story with us.
We can all watch and see what happens in the next week or two.
Indeed, we will. Alan Patricof of Greycroft Partners.